European and Wall Street stocks recovered on Friday after the biggest sell-off in months. Analysts attributed the rebound to dip buyers betting that fears tied to AI spending and disruption were overdone. The recovery coming after a deep sell-off which wiped out over $1 trillion from market value across Wall Street benchmarks. Nasdaq closed over 1.3% in the previous session, wiping out $517 billion in market value. The S&P 500 ended over 1% lower, losing $695 billion. Russell 2000 was down 1.5%, wiping out $50 billion. In fact, Friday moves pointing to a slight reversal at the end of an extremely volatile week. But earlier, during Asian hours on Friday, a fresh bout of volatility gripped Asian technology stocks. Sharp moves were seen in South Korean chip makers that form the backbone of the world's AI supply chain. Indian stocks showed a reversal to Thursday's sell-off and closed in the green. Gold and silver found some support at the end of a week that saw investors rushing out of recent favorite trades. Bitcoin bounced more than 4% after sliding to the lowest level since October 2024, while the OG token rose as the risk of tones subsided. It was still down nearly 50% from its peak. In fact, the Reserve Bank of India paused its rate cut cycle on Friday, leaving its key repo rate steady at 5.25%. In fact, the February policy pause was on expected lines and comes after 1.25% cumulative rate cuts through 2025. Currently, the repo rate is at the lowest since July 2022.
The MPC voted unanimously to keep the policy repo rate unchanged at 5.25%. Consequently, the STF rate remains at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance.
In fact, the RBI governor cited slightly higher inflation projections than previously thought and strong growth for keeping the rates on hold. However, he said inflation was in control. Malhotra highlighted that the evolving macroeconomic conditions will guide the RBI's policy path. The governor said the RBI faces a more supportive external backdrop, even as global macro and market narratives continue to swing. In fact, the RBI said the economic survey's concerns on global risks have eased. That is aided by the EU deal and a start to the US-India trade resolution, which should help stabilize the current account, foreign inflows, and the rupee. In fact, reflecting on the economy, Malhotra said that India continues to outperform the expectations and retains its status as the world's fastest growing major economy. The RBI raised the growth forecast to 7.4% from 7.3% for FY26. He also highlighted a boost to manufacturing momentum from focused spending announcements in the budget. The central bank also increased its inflation projection to 2.1% for the next fiscal year. And for the RBI, the monetary transmission of rate cuts has remained a key concern. While banks usually pass on rate hikes almost immediately, the transmission of cuts take longer to reach end consumers. The RBI has elbowed and nudged banks to cut borrowing costs and boost demand over the past year. Malhotra signaled victory to the central bank's silent attempts and said the effective transmission rate is at 0.94% versus the 1.25% cut in the current cycle. India will get a fresh statistical lens on its economy with the base year for calculating data sets to change. The governor highlighted that monetary policy will now be guided by the new data series for inflation and growth. The changed calculations are set to be effective for data releases in February. Indian markets more or less shrugged off the RBI announcements and extended losses from Thursday, driven by a broader sell-off in global stocks. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.